Hello YouTube, this is Martin Day Trades. So for today's trader mindset video, I have here beware new traders, banks target retail breakout patterns on the charts. Now, yeah, that title's a little long, but it's very descriptive, and I kind of just want to go over it again. It says beware new traders because during this process, every person, I feel like most of the time, starts to do patterns on the charts and people, I did a lot. I questioned why I was losing the way I was losing because it creates FOMO. And what I want to kind of just say is that banks know how these people trade because they're manipulative, because they're emotional traders, right? So banks know this and they know when and where to push in the markets. There's specific times in the markets where the prices push trade off, and banks know this. And what they do is they target these levels and cause emotional traders to do certain things with their trading, and then they have the capital to move the markets. What we're trying to do as traders is to trade with them. So if the banks are professional traders, the most disciplined people in the world, they're probably buying and selling at strategic points on these charts that we're able to see on computer screens, right? So when after a trader starts to take this journey and they're doing this, they start to journal. That's just a part of the process. And in the beginning, I didn't journal. I journal now. Um, a lot of the most disciplined traders in the world journal on their own. But if you work like a lot of people who are traders that work at prop firms, they're required to journal every day, and it should be required anyways for anybody who's a professional and wants to be consistent in the market. It is highly advisable to journal because then it you have documentation to self-reflect. So it's a good thing to kind of just screenshot trades and have a journal where you have the entry and then you have the end of the day or the exit price, and you just copy and paste those links to those charts URLs, upload them to your online journal, and that's it. Um, so I want to kind of just tell you guys to beware because I'm going to show you guys now some examples on TradingView where we can mark up some patterns on the charts, and I'll tell you guys where these banks will do like false breaks. So the price will jump out of uh, the breakout level, but to smart traders, institutional traders, they're waiting for a price to get to a certain fib level to then short it for the expansion downwards. So, or the opposite inverse for the long. So I'm going to show you guys. So I'm going to go to the NAS 100. That's the pair that I'm in. And this was today's daily range, guys. We're going to zoom out and come out here. Um, so we have this one right here. This was the previous day. We have this trend line right here. If you wanted to be a trend trader, we got multiple areas where the line hits. It is. Look at, wow, it's so exciting. Like, it means something, right? It means something. Well, not really. It doesn't. And yeah, there's always going to be a reaction at some of those points, and you can see that it had a sell-off here. And this was at 8:30, not even at the 9 o'clock open. This 9 o'clock was the buy. So as price was coming down here, people are shorting, shorting, shorting. They're seeing the price come down. They're like, oh, short to the bottom, and then all of a sudden the open happens, and then all of a sudden it gets bought up. Boom, buy. Took this liquidity from down here, and there's everything is targeted. So before this even happens, people are setting their eyes on these targets, and this could have been a 35 pip stop loss. This could have been an easy 1 to 4 risk to reward setup right here, guys. Um, and then it came back down. So as people are seeing this and then they see this happen, they're like, "Oh, it's the breakout." So now people are going short right here, guys, or they're going long because they're trading the breakout. So as people are going long here, And I'm just gonna do a tool where people are probably doing their tool. They're like, okay, it broke above these highs here. It's gonna shoot up. Like there's this this flag that was created, but now that it's going above this area, people are probably like, oh, look at that. It's gonna break up higher. So you don't want to be the person who's going long here with the 50 pip stop loss. Let's just say you're looking for a 1 to 2 or 1 to 3, let's say up to like right there. Oh, that looks like a good setup, right? If you're looking right here, but the way that the banks and things trade are, like this move happened, and then it came back and took out the entries from here. It got even lower, and then for the actual move up. So there could have been multiple entries. There could have been this one, been all the way out, and then this one could have got in for another entry here for a 1 to 4 this time at 10:35, so essentially an hour after the market opened. So the first 15 minutes, price had its expansion, came down, took all the took the banks. Look at where you guys can see where the banks are pushing price from. Look at so as it these highs were getting taken right here, these from the shorts, it took these stop losses out. And then it started coming back down, took these stop losses out, and then came back up and took the stop losses out again from the people who were going short from right here. So, yeah, guys, like that's why it's important to take your profit at 1 to 2, 1 to 3, have a areas of where to take your 2% off at least a day or 2.5, 3% would be nice, and then just let a runner run because imagine getting in short, I mean getting in long here, having a even a 50 pip stop loss, yo, like right there, boom. It would have gotten taken out. So that's why it's important to have stop losses and moving stop losses to break even at entry once price gets to 1 to 1. It's part of the rules. But this is one pattern, guys, and I want to kind of go over other patterns with you guys. So there's like, let's go to 30-minute chart. Yeah, I used to trade like this. So there's this right here. I could have said like, oh, well, there's this, the bear flag, right? Because there's this, and then there was the move down. So a bear flag, right? So people are like, I'm gonna enter soon as price gets above here. But let me show you guys something, okay? If you look very close at this chart, at the breakout, okay, it's right here, there was actually an area of interest to get in for this long, okay? Where did it go? Right here. So this day happened, it came up, made the high, London made its low, there's the Asian session low. We could have done a Fibonacci tool from here to there, and I'm pretty sure it's gonna line up at the 79%, because that's how these things work. Guys, I'm not making this shit up, right? I'm not making this shit up. But at the end of the day, it's all about discipline. So there's this order block here where price could fall back into last down candle, which is right here. So there's two confluences. We could have put an I there. Time of day two right at 9:30. Oh wow, that's a high confluence. Leave that there. And then, so people are getting here because I want to tell you guys a difference. Risk to reward is so important. Trader mindset, guys. You guys want to have the best risk to reward. So the best risk to reward was to be answered right here. And if one were to enter right there with the 50 pip stop loss, let's just say these lows right here, This turned out to be a 1 to 7 risk to reward, guys, or even like 7.5. We'll say right there, okay? That's exciting. That's a good move, man. That move right there makes me excited. 'Cause it's textbook. But you can see though the bigger picture where I had this bear flag where I'm gonna be buying if it breaks up above the highs. So if a trader wants to start buying here, their risk to reward as soon as it starts to come up above like right here maybe like right I'm gonna do it from right there to this low. It's 133 pips, guys. 133 pips. And even if someone wanted to get in at the break of this high, get the low right there, that's still almost 85 pip stop loss for entering right there compared to this 51 pip stop loss, and it would have been under the Asian session low, which would have given it room to breathe before, in fact, going lower if it was going to be bearish. But we got in at the best premium price for this expansion upwards. So that's trader mindset. Like, do you want a 1 to 3 risk to reward, or do you want a 1 to 7.5 risk to reward? So see that, guys? There's 1 to 3.78, and the other one is 1 to the other one is a 1 to 7.5 risk to reward. So depending on where you get in is going to affect your risk to reward. So if you're risking 1% for the amount of pips that you're risking, then you just adjust your lot size. So everyone's still risking 1% at the end of the day. It doesn't matter where your risk to reward is. But if you're looking to get the most pips out of the move, beware. Banks are targeting this area right here. As it was coming down, there was a plan. So people were thinking it's going to be selling off. They're selling it, and then all of a sudden banks push the price up. Boom. Beware, guys. It's all manipulated. Um, we can go to another area. We can do some intraday. Um, we could do this one. Like soon as it breaks this, I'm selling it. But the moment to really, and this move wasn't really that big of a move. It came up and was a 1 to like probably 1 to 2 day. Entered down here at the 800 level, right at 800. 35 pip stop loss. This could have been an easy for the highs, 1 to 6 risk to reward. Let it trade out for the whole day. Could have been an easy 1 to 7. Guys, I wonder where that lined up to actually with this level right here. Um, we could do a fib, guys, and see where that just kind of took took off from. And that was a 38% fib level, guys. That's a continuation day. This is from yesterday's buy from, end of London to that. It had that, that little move higher. Took the liquidity above here. It looks like, yup, took some of this liquidity for then the move downward. Asian session dumped, and then, so we're just trying to trade within the day, kind of be in charge of our mindsets because banks target emotional traders because they retail trade and there's not really a set plan. So when you're a smart trader, a trader who's been in the game for a while, you're going to know that you need to have a high confluence setup, meaning it needs to be high probability of it panning out, which means to have certain indicators to look for. And I'm not talking about indicators on the trading view. I'm talking about price, what big figure level is it at, time of day, is it at the towards the New York Open, Fibonacci retracement tool, order blocks, fair value gaps, liquidity voids or like areas of liquidity. So where the stop losses are going to be above the highs or below the lows, equal lows. There's liquidity down there with stop losses. So I just want to say, guys, thank you for watching my video on new traders. Beware. I'm gonna pull this up for you guys. New trader beware new traders. Banks target retail breakout patterns on the charts, and I was able to give you guys a couple examples, but I want you guys to be wary that, hey, follow, go look at my other videos, see what I'm talking about. Maybe go then tap in with Andre at FBA Capital. Um, he's been crushing it. Last month total, he made 36%, so $36,000 on his 100K funded account, which is, I think, if you put your mind to it, anything is possible. So for him to for me to have seen him go from being a losing trader to a break-even trader to fucking killing it, like that's the reason why I jumped from what I was doing with warrior trading, because Ross teaches FOMO trading, even though he has a whole course and psychological stuff, which was pretty cool. Really amazing, guys. Highly high ratings for that. Two thumbs up, 10 out of 10 stars, whatever. But when it comes to his actual like teaching his students that where to look at a high probabilistic area on the charts before using the level 2 screen, so that as price gets to this area of high interest on the charts, you can see where the flashes on the level 2 go and the orders being bought up, or if there's resistance, you can see a big volume order being eaten up by buyers. So you can know that the breakout's going to be at that level. But then all of a sudden, if orders start to reject and stack up, you can bail on it. So that's how he was really quick to get in and out. But he didn't teach his traders how Andre teaches, to look on a chart, look for a specific technical spot where price will gravitate to, and then get in with some smart money banks and push the price all the way up. He doesn't use a level 2 screen or time and sales screen. He just looks at the charts. And what would be pretty cool to do nowadays, now that I know what level 2 is and how to set it up and read it, would be to actually use that with my trading view charts, just so that I can see like price is going to the bread and butter setup, and as soon as price gets to that zone, see flashes of green light go on. That's the moment to buy, because if you see red flashes of red at that zone, then you know the banks are going to push price even lower at that level where it's supposed to be getting bought up. So that's later on. I want to become a very good disciplined trader with my trading, so I can make 36% too, like Andre. There's going to be a day where I'm a $1 million funded account, right? What's 36% of that? That's $360,000 in a month. But that's just the numbers. So I'm not gonna ever quit. I love the idea of becoming rich through hard work, discipline, grit, perseverance, good sportsmanship, have the accountability, responsibility, confidence. I have good competence with what I'm doing here with you guys. I'm just reading some of value list of values from a book I got called Dare to Lead by Brene Brown. Uh, Wisdom, wholeheartedness, well-being, wealth, vulnerability, vision, usefulness, uniqueness, understanding. Like, yeah, guys. So I'm gonna let you guys go now. This is Martin Day Trades. Go ahead, hit like, comment, subscribe, and tap into my trader mindsets, because I'm gonna give you guys valuable tips to that may shortcut your guys' journey to becoming a funded trader, or a disciplined, long-term, consistently winning trader, which means learning to lose in a winning way as well, guys. So take it easy. This is Martin Day Trades.